I want to unpack Kamala Harris's unrealized capital gains tax idea and the disaster that it is. Of course, Kamala Harris, one of the only pieces of guidance that she's given us on policy is that she plans on assessing a unrealized capital gains tax. Now, the very astute liberals out there will say, Adam, this is just for people with net worths over $100 million. This is for people who are super rich, the ultra rich. They need to pay their fair share. This isn't going to impact mom and pop investors. This isn't going to impact the people that you get to help, millionaires next door. Well, just with a basic calculator, I can show you that this is going to have a massive impact on capital markets, and it's going to cause the market to crash. So let's get into it. Look no further than a stock like Microsoft. Okay, so Microsoft, one of the largest holders, as many people would know, would be Bill Gates. Bill Gates has roughly 103 million shares in Microsoft. Okay, Microsoft's trading at roughly $400 a share. Therefore, Bill Gates has roughly $41 billion in Microsoft. Now, what Kamala Harris wants to do is tax Bill Gates' unrealized capital gains. So in order to determine what his unrealized capital gains are, we would need to figure out what his basis is in the stock, meaning what did he pay for the stock? Well, Bill Gates is one of the founders of Microsoft, so he probably didn't pay all that much. That basis is probably very low. Let's just assume it's $5 billion, okay? 1, 2, 3, 1, 2, 3, 1, 2, 3. Sorry, I don't really do billion very often. So he has a unrealized capital gain of $36 billion in his position in Microsoft. Therefore, he would get taxed at 25%. Now, this is all assuming, right? This is a very big assumption, that Bill Gates isn't going to maneuver his way around this tax. He's not going to use conservation easements or farmland or other depreciable assets or offshore his money or seek guidance from some of the very best tax and legal minds on the face of the earth in order to avoid this tax. Let's just pretend in a alternative world that Bill Gates actually pays this tax. So he has an unrealized capital gain of $36 billion in his position in Microsoft. And she wants to assess a 25% tax on unrealized capital gains. That would be $9 billion in taxes. Probably sounds good to some of the eat the rich type people out there. Hey, let's tax him $9 billion. He can afford it. He's worth $140 billion. He could pay the $9 billion, and that's not going to affect him. He can still have caviar 4 meals a day. Well, here's the problem. Here's the domino effect of that. Okay? So if he needs to come up with $9 billion, he's probably going to have to sell some of his Microsoft stock. So let's divide that by the $400 a share that Microsoft is. That means he needs to sell 22 million shares of Microsoft stock. Well, let's look at Microsoft. The average volume of Microsoft is only about $19 million per day. And that's buyers and sellers. And the funny thing about the stock market, it's pretty predictable. When there's more sellers than there are buyers, stock prices drop. And the other way around is true too. When there's more buyers than there are sellers, prices move upwards. Well, if Bill Gates needs to come to the market with 22 million shares of Microsoft stock, an average daily volume is only 20 million. What do you think is going to happen to that stock? Even if he were to spread out his sales activity, this stock is headed downwards. Now, I use Bill Gates because he's much more recognizable, but his partner in crime, Steve Ballmer, has 3 times as much Microsoft stock. So take all those numbers and multiply them by 3. And when you look at the makeup of the S&P 500, because most Main Street investors are going to have some exposure to index funds. Maybe they're with Vanguard using a good low-cost index fund. Maybe they're with TSP through the thrift savings plan and they have their money in the C fund. Or maybe you just have it all in a good growth stock mutual fund. Take a look at the emphasis of Microsoft on the S&P 500. The S&P 500 is a market cap weighted index. Close to 7% of the S&P 500 is made up of Microsoft stock. So if you're an index fund investor and you're for this unrealized capital gains tax, 7% of your portfolio is going to have some massive downward pressure. I predict it's going to drop 10 to 20%. Look at the other names on this list, folks. NVIDIA, Amazon, Meta, Facebook, Google, Tesla, Apple. That's the Magnificent Seven. That's the same bundle of names that have driven a lot of the growth in the market over the last 5 years or so. Most of those companies aren't but 25 years old. Most of their founders still walk amongst us. So that very same phenomenon that I just outlined for Microsoft is going to happen with all of these Magnificent Seven companies. And it represents close to 30% of the S&P 500. So be careful about eating the rich. Be careful about taxing people who, oh, it won't affect me. It won't affect you? If 30% of the S&P 500 has the lion's share of their largest shareholders having to sell in order to meet this unrealized capital gains tax, it's mathematics. It's not political. Mathematically, markets are made up of buyers and sellers, and when there's more sellers, because these people need to sell, you're going to see markets drop. Look out below. Thanks for watching. Subscribe, share, do all the things.